Start off here and ask everyone here, how many of you have attended a previous webinar of mine, and or how many are new traders here? So just I know where I stand and what I'm going to show you this morning. All right, thank you. Have Johnson, all right, a couple new people in here. All right, very good. I see. All right, so we have a lot of new faces here. Everyone have a chance to watch the video that I did yesterday showing you the ABC method of trading, and if so, if not, I'd recommend you watching it. I'll go over it again today. I'll show you guys some examples, go back in charts and show you exactly if you had to clarify anything. Thank you, Hector. We have here, what I have right now is software that's called the Atlas line. Those of you who are unaware of it, the Atlas line is a price action. It's a price action based quote-unquote indicator, even though, you know, guys, I'm really against indicators, but this is not an indicator based off of any type of moving average or MACD or bands or Fibonacci's. And so it's a little bit of a different thinking. I always like to relate to price first and then see how price revolves around the Atlas line. That's how I take it. Thank you, Jim. And so what you see here, just to give you an example of the Atlas line, is an entry 1217 quarter, which is right here. This is the entry at 1217 quarter. Okay, and the software plots this for you. All right, and in order to know precise targets as far as profit, as far as stops, everything has to be mechanical. So when I talk about trading, it should always be in a black and white scenario. It should never be looks like or could be. So I look at exact numbers each time I trade, and that's what I try to show the traders that I work with, to look at exact targets and stops. And so as an example, this entry here at 1217 quarter, right? How much profit should I take on this trade? And in about a minute, it looks like we're going to get a short order as well, because we have two consecutive closings below the Atlas line, and that's an automatic entry into the market. And so two consecutive closings above the Atlas line gave me this entry here, 1217 quarter. And so now comes the part where I'm going to say to you, how much profit and how do you manage a trade like this, right? And so one of the things that I use exclusively, and I think it's one of the ultimate ways to relate to the current market activities, is what I have plotted on the bottom there, called the ATR, the average true range. And I have the ATR set to a parameter of 4 because I'm only interested in the most recent current market activity, not what happened an hour ago or 3 hours ago or yesterday. I'm concerned about what's happening in the now. And so the ATR is telling me that a profit potential of 1.7, which is about a point and a half, a point and three quarters, is what I can achieve on this trade. And that's exactly what it looked like. And so the results that you see on the DayTradeToWin results page for the Atlas line and for the power price action, I have to update the power price action. I'm a little behind on that. But the results on the Atlas line were updated as of yesterday. This exact entry of 1217 quarter, and my exact profit target is based off of the ATR. And so for an example like this, I'm looking at a point and a half, a point and three quarters maybe, but really a point and a half, because I'm always rounding down a little bit more conservative. So I know that based on the current market activity, this is what I can achieve. The mistake a lot of traders make is that as soon as they place a trade, they do not, unfortunately, they do not look at what's happening in the now. They say to themselves, well, I want 5 points, or I'm going to trail it, or I want 4 points, I want 10, or I'm just taking 1. And I'm going to say to you, always look at what's achievable, what you can take out of the market. And what you can take out of the market is what's currently happening. 1.5, 0.75 maximum is what I would take on a trade like this, because I know this is what it's giving me. If that number was at 3, that's 3 points, that's 12 ticks, I would say that's what I want. I want 12 ticks, 3 points out of the market. But I'm not going to try for 3 right now, 3 points. And so a 1.5 from 12.17 quarter is 12.1850, 12.1875, if my math is correct. And that is what happened. That is what happened. Now there's a double bar short here, 12.14 quarter, right there. Plotted live, 12.14 quarter to go short. And I'm going to ask you, what is the ATR right now? Can everybody see what that number is right here and right now? What is it? Can anybody see that number there? 2.49, right. So that means, very good, Blake, Kevin, that we are looking at a profit target of 2.5, 2.25. Since I'm more conservative, I'm going to say 2.25. So 12.14 quarter, 12.13 quarter, 12.12 quarter, and 12.12. This is my profit target based on the current market conditions. This is what it's achievable. Very good. Very good, Thomas. So you can see that there's a relationship as a trader that you have to look at, not just what you think can happen or what the people on TV say is going to happen for today, but the current market conditions will always lead you in the right direction, always. All right? Does everyone have any questions on how I use exact profit target and how I enter into the trade using the Atlas line here? Okay, very good. Not on the iPad. It works on NinjaTrader. It works on TradeStation, eSignal, but not on iPad. And you have to, as a trader, I have to say you should be using something that's reliable. Most software for trading is based off of a PC, not off of a Mac. So I would look into an investment of a PC. Most software, unless you're using something like Thinkorswim or OEC, OpenECRI, where it's trading off of the internet, right, through the web, I would recommend a platform, a stable platform with good data. All right. There's not a lot of traders out there, unless you're end of day trader looking at swing trading for a couple of days, that really trade off the iPad. All right. Well, as soon as this candle closes, you're in, right, Dean? But you know what the entries are. The entry is going to be 2 consecutive closings, right? So I teach this with the purchase of the Atlas line or the power price action or the ATO. We have a webinar that I explain to you how these orders are created and why they occur. So 2 consecutive bars that close below or above the Atlas line triggers an order, right? That's your entry. And so even before this candle closed, Hector, even before this, I'm sorry, Dean, even before this candle closed, I knew that I'm looking for an entry short into the market, even before this closed. And that's why I recommend the ATR and the bar timer, see the bar timer right here, as a measure of what's happening, right? Be ready, right? You have 4 minutes left, there's 1 minute left, there's 10 seconds left. I'm ready. All right, guys? Hey, Dean. All right, very good. Very good. All right, and I would use the same rules that I'm showing you, Dean, if you have the ATO for your profit targets on the at the open method as well. In the at the open method, remember I say take 2 points or take 4 points. I would use the ATR, the average true range, as a clear definition whether you should be looking for 2 or if you should be looking for 4. All right. All right, so the entries are known in advance. I just need to have that candle close and prove it. And so the ATR right here is telling me 2 and a 2 1/4, well, I round down, so I have to say 2 1/4. All right. If this was 2.53, it would be 2 1/2. Right. So 2 1/4 points is what I want, and my profit target is right here. All right. The same thing occurred here this morning. Those of you who entered late here, the double bar long at 12.17 there was a 1.5, 1.75 profit target, and it was hit right there. All right. Well, stops, Derek, are interesting because most traders use what most traders use is a hard fixed stop, right? And so I'm going to step outside the box a little bit, and remember, all I trade is price. I really want to just concentrate on price. And so I'm going to use 3 specific stops to get me out of the trade, always. And whichever occurs first is what I'm going to use, right? And so I'm not going to have just one stop that's a hard stop. I'm going to use 3 specific stops to get me out of the trade. So the first is going to be a catastrophic stop. So you have to have some type of catastrophic stop in case something in the world occurs that it's out of your control. So you got to have that stop in there. So a catastrophic stop is a recommendation always. Let me just close here the office door. As I'm in Florida, it's hot and there's some traffic. All right. Now, the first stop is catastrophic stop. The second stop is going to be a prove it stop. And what I mean by a prove it stop is price proves to me that it is not going in my direction. So a prove it stop is going to be a close on the opposite side of the Atlas line. In this method of trading, I use a prove it stop as a close on the opposite side of the Atlas line. It's proving to me it's not going where I want it to go, so I'm out of the trade. Third but not least is the time-based stop. And the time-based stop is very important because it limits the amount of time that you're in a trade. So as an example, I talk to traders all the time and I ask them, when did you get out of the trade, or why did you hold it for so long? Why didn't you get out earlier? Why 3 hours later you're still in this trade? And they say, well, I have my stop, my hard stop, and if it's going to hit, that's my stop. And I completely disagree. I say to you, if you do not get your profit target or take your profit target within a certain amount of time, then get out of the trade. Right? You went in for a reason. There's a short trade here at 12.14. If it doesn't hit my profit target of 2 1/4 points within a certain amount of time, there's no reason for me to hold on to this thing for an hour or 2 hours or all day. I went in for a reason. I want to see instant gratification. It should go to my profit target within a reasonable amount of time. And so I use a time-based stop always to limit the amount of time I'm in a trade. All right? Hector, are you referring to the Atlas line, or are you referring to all the trades that I trade? Because the Atlas line is just one part of what I do. I have the at the open method. I have two scalping methods, and so the entire program of the mentorship program incorporates it all. It's really, we take everything, we put it together as a trading plan. So those of you who have the Atlas line, or those of you who have the at the open, you can absolutely trade it on its own. But more importantly, when you put it all together, you have a power price action trade occurring that's what I'm taking at the moment. Or I have an at the open trade, that's what I'm taking. Or I have a Atlas line trade, that's what I'm taking. So there's definitely a combination of whatever occurs first you take. All right. The amount of time, Wayne, is typically 4 bars. 4 bars. If I am not able to reach my profit target within 4 bars, I'm out of the trade. Atlas line can give multiple trades a day, because if this continues further down, there's pullback trades and there's strength trades that occur as the trend continues and continues. So as an example, let me show you yesterday here. And you can also add multiple Atlas lines to your chart too, which I do on occasion when lunchtime rolls around or the late day rally, late day sell-off. I add additional Atlas lines, or even overnight for the currency traders that want to trade currencies. Alright, so here is yesterday. Right? I'm not sure if I included this chart with the video yesterday, but here is your double bar short right here. 1, 2 to go short. And then you have a strength trade to go short right here again. And I teach all of these methods during the and here's another short trade right here. And now I don't do anything here. Price is pulling back. I don't really do anything here. Actually, there is a pullback trade right here, as a matter of fact, right there. But after this, I don't do anything here using the Atlas line. Here's a long trade to go long, and here's a short trade right here. And remember, I'm using a time-based strategy to get me out of the trade. So if I'm not able to make my profit within 4 bars, I am out of the trade. I'm out of there. Right? And right away we have a short signal. And we have a strength trade right here. And a pullback trade right there. You got it, Bob. Okay, let me see a couple of questions here that I might have missed here. Time-based stop is 4 bars. 7:30 to 9:30 in the morning. Yes, I do, Jim. I'm going to add a second Atlas line to my chart, and I'm going to place it instead of the 9:30, which is the Eastern Standard Time zone for where I live. I'm going to put it for 3 o'clock in the morning. So I'm going to add a second Atlas line to my chart for an overnight market. So we have an Atlas line plotting here at 3 o'clock in the morning. And so if you want to trade pre-market, prices above the Atlas line, this is where you want to be long. From your time frame, you said from 7:30 to 9:30, right there. Right? So I have an after hours or Globex session Atlas line, and Atlas line is good for currencies, any market you want to trade. There's no parameters. If you want to take a look at the back end here of the Atlas line, there's no parameters that you have to adjust or configure or optimize. There's none of that stuff. So all you do is place the text where you want the text to be seen, when do you want the market to open, and if you want it, which trades you want to see. You want to see the trade double closes or the trade crosses or the trade bounces. That's it. There's no optimization or linking of any number to the Atlas line. It does the calculation itself for the market that you pull up. Alright. So this is the overnight, and if you want to see any specific market, I'll be happy to show you the market. If you want to see currencies, I'll pull up a currency chart as well. You can use other, Peter, you can use other time frames. You absolutely can. Euro, sure, I'll bring up the Euro. Give me a second. I have to put the March on there. I don't have the March yet on there. The Euro is a good market to trade. It moves, as long as it moves enough. Why do I use a 5-minute chart? Peter's question here. Well, think about what you see here. Well, actually, I probably answered this in previous webinars. Does anyone know why a 5-minute chart is the ideal chart to trade, and you can put this on a 1-minute chart, a 3-minute chart, right? It doesn't change, right? Let's wait till it loads up a 3-minute chart here. That's a 3-minute chart. It doesn't change. The entries are exactly the same. 2 consecutive closes above and 2 consecutive closes below. That's still the setup for these entries to occur. All right. So you can definitely go to a smaller time frame, and I also suggest always to look at the ATR for the current market conditions. So if you go to a smaller time frame, you're definitely going to get in earlier. There's a little bit more whipsaw, which I want to avoid, and that's why I like the 5-minute as opposed to a 1-minute, for example. But I still want to take the recommended profit target based off the ATR. Okay. You need 24-hour data, and so if the forex market you're looking at uses 24-hour data, because the Atlas line needs a couple of days of calculation to make it, you're able to see it on spot forex. What some forex traders do is they look at the entries on the futures, and so they correlate very nicely with the forex, and so they take the entries on the forex. All right. So let me pull up a Euro chart. Let me just grab here and add the March Euro. Right now I just have the December. Bless you, Chad. And let's go here, Instrument Manager. Okay. Yeah, I don't. It's a great question. I don't recommend trading during news events. All right. I don't recommend trading during news events because the chaos, right? We don't know if the market's going to go crazy to the upside 5 points or 10 points up or down, as it usually does during a chaotic move. So I do not recommend. Give it a bar or two after the news event, and then you can, if it gets back to normal, you can trade. But I don't recommend just jumping in right prior to a news event. All right, Derek? Yeah, I would. Thomas, I would adjust the time frame. All right. Okay, you guys want to see the euro, right? Euro. See. Okay, so here's the euro. Here it is on a 3-minute chart, right? And here it is on a 5-minute chart. And so on a 5-minute chart, the rule is 2 consecutive closes above or below the Atlas line for an entry. So I have here 1, 2, short at 30.34. It's exactly the close of that candle. You're looking at 11 ticks based on the ATR, and I'm almost certain you have it. Here, 30.22 is 1, 2. That's my entry. How many bars am I giving this trade to work out, everybody? Together? How many bars am I willing to let this trade? That's right, 4. That's right. And so if I'm on the 4th bar right now, right? This is 1, 2, 3, 4. To close this candle, if I'm not able to make the ATR of 12 ticks, 3 points, I'm finished with it. I'm out. Small win, small loss, break even. That's how you manage a trade. Instead of something being a catastrophe, you're cutting it off right at the head. John, you had a question here, or I guess a comment on any of your methods. You want to elaborate on that, John? I was asking you about the 5-minute, and somebody had a question, why do I use the 5-minute chart? Does anyone have a reason why I really like a 5-minute chart? Anyone have any idea? There's a specific reason why. Less noise, all right, that's a good reason. It's not really the reason. Eliminates the whipsaw. More time to analyze the bars. All right, that all sounds good. That's right, Manuel. Manuel has it. Even though you guys are all right? I mean, you can't really. There's a lot of noise in a 1 minute. I completely agree with you. But Manuel says here it's divisible into other time frames. And so if you look at, you guys are all right, but the real reason why I like a 5-minute chart is if you look at what's here defaulted in almost every single charting platform, whether it's TradeStation or Thinkorswim or OEC, eSignal, they're all the same defaulted time frames that traders are looking at. 60-minute, 30-minute, 15-minute, 10-minute, 5-minute, 3-minute, even 2 and 1. They're all the same. And so the likelihood of a move happening right after a 60-minute bar or a 30-minute bar, or a 15-minute bar, 10-minute bar greatly increases because everyone's looking at the same information and then making a judgment call to trade. And so with a 5-minute chart, since it's divisible by all those times, if there's a move that's going to occur based on a 15-minute chart, the 5-minute will catch it. If there's hourly charts that you're looking at and a move occurs that breaks out on a 60-minute chart, the 5-minute is going to be there to catch it. And so the 5-minute chart, in my opinion, is a resource that you can capture any move that occurs based off of what everybody else is looking at and then anticipating and taking a trade off of. Well, as a day trader, Hector, I'm not looking for more than a 5-minute chart. If you look at 30-minute and 60-minute charts for trends, you could. It's not really what I do. I like to trade and just use one chart, and have all the methods that I look at on one chart. So I'm not looking at a top-down effect where there's a 60-minute, 15-minute, 30-minute, 1 minute, and then when everything aligns, I do something. I do not do that. I look for my exact rules, whether it be a power price action, ATO, Atlas line, X5 trade, roadmap trade, whatever the case may be, it all has to happen on a 5-minute chart. All right, so I'm not looking at other time frames. That's right, Thomas. It covers more traders. Hector, John, do you not trade through news events on any of your methods, specifically the ATO? No, I do not trade through any news event. There is a specific method to trade the news that I do, but it is not based on bracketing the news, and then like most traders do, they bracket the news event, and if it goes up 2 points or down 2 points, then they're in. It's not what I do. But there is a specific trade that I do based on the news. But as far as the ATO goes, the at the open method or the Atlas line, I absolutely do not want to initiate that and be inside of that chaos. All right. So this is the Atlas line on the Euro. This is, I'm going to go back to the Emini or any other chart that you want to look at. You can see how the Atlas line fares in other markets. And let's take a look at yesterday. I haven't seen what yesterday looks like on the Euro. This is 3 o'clock in the morning. Now, does anyone know why I have the Atlas line at 3 o'clock in the morning? Here overnight. Now, I'm sleeping overnight, right? I mean, I'm counting sheep here at this time. But why 3 o'clock? That's right, Euro Open. Very good, guys. Yeah, you have a lot of smart traders in the room. Very good. That's right, guys. Very, very good. 3 o'clock in the morning is 8 o'clock local time in London. That's right. Very good, guys. Believe it or not a lot of traders know that. So I'm glad you guys know that. Not a lot of traders are as keen on that, but that's good. So I expect some volatility, right? I expect something to happen. And so at 3 o'clock in the morning, when the Europeans wake up and are drinking cappuccinos and tea, right, in England, there's action. And so if you're international, you have an opportunity. If you're stateside, you got to get up in the middle of the night to look for it. And so the rules are exactly the same. They do not change. 1, 2, consecutive closes above the Atlas line. I'm long, 1304. Right there. My profit target is exactly 10 ticks. And so 14, 13, 1.304 would be, 3014, right? No, 304, I'm sorry, 3040, 3050. What am I talking about? Yep, 3050. So I'm out of the trade at 10 ticks based on the ATR. And you see that it did not move much higher than that, right? So if you wanted more than 10 ticks, you were unable to grab it. Very good, Bob. Good job. Yep, so that's what I want, and that's what I can expect, and that's what the market gave me. So if you wanted 30 ticks, you were out of luck. Now, this short here at 1.3022, why does this occur? 1, 2, I'm short. That's the entry. Same exact, the closing price as this software plots it for you. I look down, 15 ticks, and I'm out of the trade 4 bars later with 15 ticks. 15 ticks would be 06, I believe, right? 06. If my math is correct, you'd be out with 15 ticks there. All right. You see down here the ATR, Jim. You see down here 15 ticks. I'll show you here. The ATR is 0.00159. That ATR is the equivalent of moving the decimal place over 4 places. So move the decimal place over 4 places, and that's going to equal 15 ticks. Right? 1, 2, 3, 4. It's actually 15.9, but you know me, I round down. 15 ticks. That is exactly who asked that question? Jim. That's exactly how that works. 2 consecutive closings, John. 2 consecutive closings, my friend. 2 consecutive closings. Right? So they don't have to be too red or too green or too purple. 2 consecutive closings, right? Let me see some other questions here. Do I look at pivot points, support resistance, or do you trade just off the Atlas line for the strategy? Just off the Atlas line. The Atlas line is calculated automatically, so I just trade off the Atlas line. Jim, do you understand how I got 15 ticks out of that? Okay. Blake, does the direction of the ATR line matter in relation to the direction of the trade, or are we only using it to tell the number for a profit target? No, the direction of the Atlas line does not trade either slanting up or slanting down. What matters is the crossing of the Atlas line and proof that the price is crossing it by the rules, right? And it's mechanical rules. Blake. What market, Thomas, are you referring to? On the ES, let's take a look. You have the Atlas line, right? And we're going to do an Atlas line how-to webinar right after this, right, Thomas? As soon as I'm finished here with this webinar, we're going to stay in the room, Thomas. All right, and I'll do the one-on-one with you, because I think you just purchased the Atlas line a few days ago. All right, Tom. So this is the Emini. All right. So, and I'll explain everything. I'll go into much more greater detail. Okay, Thomas. All right. So, send me an email, Bing. Send me an email, and I will look it up, and I'll definitely make sure you're on board. All right. So take a look at this as an example for today on the Emini 5-minute chart. Right. 1, 2. I am short right there. I'm giving it 4 bars. 1, 2, 3, 4. I'm out of the trade right here. Right. Remember, I don't know this is going to happen. Right. I don't know this is going to happen. Did I still make money on this trade? Yes. Right. Not maybe everything that I wanted, but I did. And so if it didn't reach your profit target, this is the best way. Trust me when I say this. Do not let a trade go against you unnecessarily. All right. Now, after this occurs here, we're going to do what's called strength trades and pullback trades, because this may be a trend to the downside. And so now moving forward, I'm going to look for pullbacks. I'm going to look for strength trades. I explained these methods on the one-on-one that I do, giving you an opportunity to take additional. Remember, it's below the Atlas line. I just want to take short trades. Atlas line is an awesome filter to tell you the direction. So I only want to take short trades at the moment. There's no reason for me to take anything long. We have a one-on-one, Derek. The period Bing is 4 on the ATR. And there was another question here about the why am I looking only at 4 bars? I forgot who it was. Bing, the ATR parameters for what training is provided with your purchase of the Atlas line? I include a one-on-one webinar. Well, there may be 1 or 2 traders in there, but I include a private webinar to explain to you how the Atlas line works, how you should trade it, looking at the markets that you want to trade it, giving you all the rules, all the setups, and it's recorded. So on top of you getting the software, you also get a private session with me. It's recorded, it goes up on your account, and it explains to you exactly how you should be using the Atlas line every day. I don't, Jim. I don't have a monthly. It's 6 months or lifetime license, okay? And lifetime license, you get 2 computers. Most traders have a laptop and a home computer, and so I include 2 licenses with a lifetime software. No, not December, Patrick. Not December. We're trading March. Do you want to know an easy way, a very easy way? And you guys should read my blog. I have a blog that I update. I give tips. I do trading videos, training videos there. So right around the time, if you go back and you look at the blog around the beginning of December, beginning of December, you're going to see a very simple, and I'll explain it to you right now too. I think it's important. You should know this. It's a very simple way to know when to roll over. And it's very simple, right? Even though your broker might email you and the trading platform might do a pop-up, but you should know as a trader when the rollover dates are. So when we roll over on the E-mini and the Euro and the futures on the CME exchange in Chicago. Typically, this is how it works. Does anybody know here? I mean, I don't want to... I don't want to make sure everyone knows. Anyone know when and why we roll over? What's a simple rule of thumb? Those of you who read my blog, it is. Let me just put this out of the way here. The third Friday of the quarter ending. Thomas, that's not right. That's totally wrong, Thomas. You watch for volume. So you'd just be watching for volume, Tony, in Montana? Or Missouri, I'm sorry, Tony, Missouri? No, there's a simpler way. You guys make it. Trading isn't that complicated. It's actually, you got to keep it simple. The expiring contract month, December, right? Expiring contract month is December. Roll over on the second Thursday. That's it. That's it. Second Thursday of the expiring contract month, you roll over. Very good, Bing. Now in March, when do we expire? When do we roll over to June in March? See if you guys can now forward this into March, into the future. The second Thursday of March, we roll over to September. That's right. It's as simple as that. It's as simple as that. I would still, Tony, in my opinion, I know you're looking at the volume. That's a very smart thing to do to see what's moving. But as there's traders that are going to start getting out of December and going into March, and it'll happen very fast. So I would still trade the second Thursday of the expiring contract month. I would still move it over. Thursday or Friday, really. It's Thursday or Friday, right? Thursday or Friday, second Thursday or Friday. That has always served me well, and it's a great rule of thumb. All right. The blog, Bob, is DayTradeToWin. You go to DayTradeToWin.com, and then you just click on the blog, or DayTradeToWin.com/blog. So you can get the blog right from the DayTradeToWin. And morning is fine. Morning is fine, Hector. Bing, I don't do this every day. I do it probably once a week, maybe once every 2 weeks. Yeah, once a week. I try to do it once a week. I'm going to record this as well, and I'll put it on the blog as well for you guys to look at. Question here about the Atlas line. Oh, the blog address is DayTradeToWin.com/blog. Yep. So there's a lot of stuff on the blog. A lot of stuff there on the blog. For a refresher, Bing, why don't you email me, Bing, and if you'd like to attend the next Atlas Line training, if you have the Atlas Line, I'm happy to invite you if you want a refresher on the Atlas Line. I have no issues with that. All right. There is a 6-month lease, Bing. There's a 6-month lease and there's a lifetime. So you can get it as a 6-month lease, or you can get it as the lifetime. All right. So now I'm going to ask you: is there a reason for me at this moment to think about taking the market long? Or because price is below the Atlas line, should I really be just taking and concentrating on short signals? What do you think, guys? Right? Only shorts, right. Only shorts. That's right. There's not, John. The Atlas line is only software. It's not. There's not a way to manually create it, because it's a calculation that it does per market. Let's take a look at the euro. See what the euro is doing on this. I'm curious. Euro 6. Yeah, it's going down. And so now the same thing with the euro. I just want to take it short. Australian dollar should be similar. Stick at the, well, I got to add the Australian dollar here. 6A. There, I had it already. Good. Yep, and here's the Australian dollar right here. This is a pullback trade right here. This is something I teach to go short again. It's pulling back, you go short again. I give a discount if Derek, if you purchase the 6-month and then you want to update to the lifetime license, I give you a discount on that. I think that's fair. All right. If you like it and you want it as on 2 computers for a lifetime model, I will give you a discount on it. That's the Australian dollar. Crude oil. I think we're in the December crude oil, right? Let's take a look what the oil is doing. Here is the oil here. A little bit of flip-flop. And I'm not sure if we're trading the... Actually, I'm not sure if... actually, this is yesterday. Oh, 11:18. I think we're maybe on a different contract for the oil. It stopped plotting. Alright, if anyone hasn't watched the video on the ABC method, I'm going to quickly, because I have a meeting here for a couple of Atlas Line traders who purchased the Atlas Line coming up now at 11 o'clock. Those of you who are interested in attending, you can go ahead and purchase the Atlas Line, and you can just stay in the room and I'll set you up right after this webinar. But if you haven't seen the ABC method, I definitely recommend it. And so just to show you what the ABC method is all about, you got it, Bing. Thank you, Bing. Sure, Derek. I do different schedules all the time, Derek. I don't have a trial for the Atlas Line. You know, I do these trials to show you how it works. All right. So let me show you what to expect today for the ABC method. I'm going to put a line here at 9:30. I'm also going to put a line at 12 o'clock here, just to give you a heads up of what to expect and how to determine if today is going to be a trending day. So between 9:30 and 12 o'clock is 2.5 hours. 2.5 hours of price action. This is the high and low so far of 9:30 to 12 o'clock. Moving into the future, if the day is going to trend, we're going to have proof of that. And the proof is going to be if 2 candles close above or below the range of 9:30. Well, please, adjust it for your time zone, but Eastern Standard, it's 9:30 to 12 o'clock. And so this will tell me if we have a trend early on. And this may turn out to be another short entry right here, just like it was. This is a pullback trade here. Well, so if this candle closes red, it's a short. And so look for this to dictate what the day is going to give you. If the day is going to become one of these trending days that just goes down and down and down, have proof of this. Use price as the proof. 2 consecutive candles closing above or below the range of A will give me a sign to go short the market. The market will close much lower. Will close much lower. Now, you take the same thing that we just did, same thing, and you plot it from 12 o'clock to 14:30. And we take what happens in the B part of the day, because this is the reason why it's called ABC. This is A, this is B, and this is C. You take the same example of what occurred in the B part of the day and you plot it into the future and C. And if there's a late day rally or late day breakout, be sure to watch it and trade it. It's an excellent method to capture these moves. All right. Stops are going to be a prove it stop and a catastrophic stop, on the ABC pattern. And so if you haven't watched that video I put out yesterday, it's on my blog. And if you haven't signed up yet to get updated videos when they come out, just go to DayTradeToWin.com and you'll be on our list. And every time I put on a video, there's some type of alert that gets sent out. And so let's take a look at yesterday here. This is yesterday. This is 9:30. $12. Right? Here's my range A. Into the future, I have B. So what's my proof, if you guys were paying attention, what's my proof that the market is going to trend up or trend down for the day? What am I looking for? I'm looking for price to come out two closings above or below what occurred in A. So did this happen in the B part of the day? What do you think? Nope. That's right, Bob. Nope. Not at all. And so therefore, there's no reason for me to think that the day is going to be a trending day. It's going to be like any other day, just a back and forth whipsaw. B is doing exactly as I would expect. Exactly as what I expect. Now you take exactly what happened here in B and you plot the same thing into the future. Let me just get these out of the way here. Here is the range of B. Going into the future, did we have a late day rally or late day sell-off? Two consecutive closings above or below the range of B? What do you think? Did that occur? No. Almost, but almost doesn't count, Manuel, when it comes to trading, right? All right. So no. So let me show you another day. The day before that. Here is the Atlas line on December 13th. And all of these results are exactly as you see them. I put them on the results page. Here's a long. 4 bars later, I'm out if I didn't make my profit target. Here is 1242.50 as my entry. I want a 1.75, so 1243.50, 1253 or 1244.25 would be my profit target. I didn't make it, so you're out of the trade from here to here, 4 bars later, right? And it saved you this entire mess of it going down, right? Now you have 2 consecutive closings to the short side. 1236.75 is right there. That's my entry, and now I can make whatever it was here, 2 points. I think it was, to the downside. All right. Now, ABC. A is from here to here. Right. B is from 12 to 14:30. Did we have two consecutive closings that occurred from here to here? No. Yes? No, Dean. No, yes, no. There's no two consecutive closings here above the range of A. Right? No problem. And so now I take what happened in the B part of the day, just like so, and I say, are we going to have a late day rally or a late day sell-off? And two consecutive closings above or below, I'm in it right there. So now did we have two consecutive closings and did the day move from that point on? Derek, I'm glad you asked me that. It works exactly the same. Derek, it works exactly the same. Derek Dan. When you look at it 3 o'clock on currencies, it's the first 2.5 hours, second 2.5 hours, ABC, 2.5, 2.5. So watch the video that I did yesterday. It'll probably clarify it a little bit deeper. But you can absolutely do this at 3 o'clock in the morning when the European session, London Exchange, Life opens. Okay? It would not come into effect, Tony, the time-based stop. I would hope that it would, but it wouldn't come into effect. Instead, a prove it stop, I think, Bob, you were asking me, a prove it stop is when we have a closing back above the range that we just came out of. That's my prove it stop. All right. All right, guys. I will give you guys a coupon too. I forgot what the coupon was, but there's a coupon for a percentage off the Atlas line if you're interested in purchasing it. I'm going to start a session in just a moment. Let me take a look at what's happening right now. In the now, here we are. So let me give you that coupon for the Atlas line. I forgot where it was. Nate, if you can do me a favor and let me type it in the room. Or Chad, if you can look it up there on the newsletter. What was the coupon code that we used for yesterday? Yeah, I can pull it up. All right, thank you, Chad. And so I plotted on here. I have a couple people asking. And the next session I'll have after this will be in a few days. I got you. Okay. So here's the coupon for the Atlas line. Those of you interested. Happy holidays, Merry Christmas, Bob, to you too. Prosperous New Year, absolutely. All right. It's for 10% off. All right, those of you who are asking here. You got it, Derek. And I may have one or two other webinars prior to the end of the year, maybe. And just so you know, I'm also starting a new mentorship class the first week of January. So those of you who are interested in going 8 weeks with me, with a group of traders in the room, it starts January 5th, I believe. And all the information is on my site for the next upcoming class. All right, and I'm going to still keep the same pricing of 2011 as we go into 2012. All right. Have a great rest of the week, and I'll see you guys soon. And if you have any questions, I'm always available at support@DayTradeToWin. But I would definitely check out the blog just to watch a couple of videos that I have there on trading. I got you, Thomas. Oh, you bought the power price action. Yes. It was sent out, Thomas, I believe it was yesterday. And so you should be getting that. Yeah. And my Skype, though, Dean, if you want to talk to me, my Skype is DayTradeToWin. If you want to talk to me directly on Skype, that's my Skype. Or chat. All right. Very good, guys. Thank you, and I'll see you at the next webinar. All right. Good trading. Bye-bye now.